Well, as we're waiting for people to join us, I think we're going to get started right away. So, good evening and welcome to the University of Manitoba's Tuesdays with TD webinar, Starting or Growing Your Small Business. My name is Tracy Bowman. I'm the Executive Director of Alumni Relations and a very proud University of Manitoba alum. Before we begin, I'd like to acknowledge that the University of Manitoba campuses and research spaces are located on the original lands of the Anishinaabe, Aniniwak, and Sinuak, Dakota Oyete, Dene, and Inuit, and on the national homeland of the Red River Métis. UM recognizes that the treaties signed on these lands are a lifelong, enduring relationship, and we're dedicated to upholding their spirit and intent. We acknowledge the harms and mistakes of the past and the present, and with this understanding, we commit to supporting Indigenous excellence through active reconciliation, meaningful change, and the creation of an environment where everyone can thrive. Our collaboration with Indigenous communities is grounded in respect and reciprocity, and this guides how we move forward as an institution. Well, thank you for joining us, everyone, and making this event part of your day. Tonight, we are going to be delving into all things small business and what to consider, whether you're starting or growing your small business. So things like, what are the key essentials you need to start up your business? Should you have a business account? What about a credit card? How do you get financing from the bank? Do you need a business plan? How does owning a business impact your personal finances? So you'll learn all this and more with the goal of setting you and your business up for success. So if you have that entrepreneurial bug or know someone who does, you are definitely in the right place tonight. So we also just recently launched a small business insurance discount program for UM alumni, staff, and faculty. And I'll be going into more of that at the end of Sean's presentation and just some highlights, but a lot of that information is on our website. So just a few housekeeping details before we get started. So if you've participated in any of our virtual programming before, you know that we record these sessions, and we do that because we'd like you to watch this as many times as you'd like, share them with others, and we know some people aren't able to make it live this evening, so we want to make sure that's accessible to all. And then, as I said, you'll be able to refer to as many times. So if there's something that you didn't quite get tonight, if you want to watch it in a month or 2 months when you're further along in your business, that resource is always there. Now, we've allocated an hour for tonight's webinar. Usually we stick to that. Sometimes if there's lots of questions and we really want you to ask lots of questions, we may go past 8 p.m. But I really encourage you to ask questions. There is no stupid question. We're all learning, especially as if you're starting a business. So please use either the chat or the Q&A function. I will be monitoring both of them. So while Sean is presenting, if something comes to mind, feel free to ask that question during the presentation, but I will be looking at it at the end. You have free expertise here, so I really encourage you to use that time and to ask your questions. And also, before we start and I introduce our panelists, I want to just say a huge thank you to TD Insurance, who is a University of Manitoba Affinity partner, for their sponsorship and leadership of today's financial webinar. So as you may know, TD Insurance provides discounted vehicle, home, and travel insurance to UM alumni, staff, students, and faculty, as well as I've mentioned recently, small business insurance discounts for alumni, staff, and faculty, and direct investing opportunities through TD Wealth. And you can check out all of this and more at umanitoba.ca/community/alumni. And there's lots of information there on that and other HERD perks and benefits available to you as UM alumni. So now let's meet our panelists. So I'd like to introduce, I would like to introduce both Daneeka and Sean, who are tonight's presenters. I'm going to introduce Daneeka first. Daneeka Rico is our senior financial planner with TD Wealth. And she is a familiar face for those of you who've been with us in our previous Tuesdays with TD. She has been in the financial services industry for over 15 years. She has substantial knowledge on what seems like any financial topic, and she's always our great go-to resource. And Daneeka works with many clients on their investment portfolios to help them reach their goals. So welcome, Daneeka. And Sean is a small business account manager with TD Bank, and he works with entrepreneurs to start, finance, and grow their business. And he specializes in business lending and helps clients structure credit applications to secure capital. And he also has a background in bookkeeping and financial analysis. So he's able to help business owners better understand their financial position and make informed decisions as a result. So welcome, Daneeka and Sean. And I'm going to turn it over to the both of you.
That's great. Thanks a lot, Tracy. And thanks everybody for tuning in today. Um, so yeah, we'll kick it off here. So we'll go to the next slide here. Kind of discussing each of the topics we'll work through. So today we're going to walk through the key essentials of starting a business. We'll go through why having a strong business plan is so important. Um, how to choose the right business structure, setting up your banking foundation, how financing works, and how your business ties into your personal finances. All right. So when starting a business, there are a few key areas you really want to get right early on. A lot of people focus on the idea itself, but what really determines success is how well you plan. Understand your market and manage your finances from the beginning. These next sections are going to walk through what that actually looks like in practice. So, we're building a strong foundation. One of the most important steps in starting a business is building a strong foundation through a detailed business plan. This starts with clearly defining your idea and understanding your target market. You need to know who your ideal customer is, their demographics, their behavior, and what problem you're solving for them. If you don't understand your customer, it becomes very difficult to market your product or service effectively or price it properly. You also need to analyze your competition. Look at what others in your space are offering, how they're pricing, and where there may be gaps in the market. If you're pricing higher than competitors, for example, you need to clearly communicate what additional value you're providing, whether that's quality, service, branding, or perhaps convenience. If you're pricing lower, you need to understand your margins and make sure you still have a competitive edge while remaining profitable. So another key part of this is estimating your startup costs. For example, if you're starting a custom clothing or textile printing business, you need to think about equipment like printers, heat presses, inventory, software, and workspace costs. From there, you need to determine how to price your products in a way that covers your costs, generates a profit, um, and allows you to earn a return on your investment. Most important thing. Understanding these numbers early on helps reduce surprises and gives you a clear picture of what it will actually take to launch and sustain your business. So why does planning matter? A business plan plays a key role in both planning and financing. It helps you think through different scenarios, including potential risks and worst case situations. For example, what happens if the market slows down? What happens if a new competitor enters and undercuts your pricing? Or perhaps uh, a new innovation makes your offering less relevant. Thinking through how you would respond to those situations helps you stay prepared and adaptable. A strong business plan also improves your chances of getting approved for financing. So it shows lenders that you've done your due diligence, that you understand your business, and that you've thought through how the loan will be repaid over time. So ultimately, it reduces risk for both you and the lender. It also helps guide growth decisions. So I always recommend to my clients, like, even if you're an existing business, you should always have a plan. You know, a lot of them, we all get caught up in the day to day, and we lose sight of what our actual goals are in the medium to long term. So as your business evolves, you'll need to evaluate whether additional capital will increase productivity, efficiency, or output, and how that translates into revenue and profitability is what it comes down to. So having that roadmap makes it much easier to scale with confidence. All right. So assuming that your plan is all in place, the next most important thing would be choosing a business structure. So I'm going to walk through the three main business structures and the key implications of each when starting a small business. So the three most common structures would be sole proprietorships, partnerships, and corporations. So a sole proprietorship or partnership is the simplest to set up, but it comes with unlimited liability. So in simple terms, it means you and the business are legally the same. A corporation, on the other hand, is a separate legal entity, which can provide liability protection in certain legal situations. It's also important to note that in small business lending, lenders will almost always require a personal guarantee in addition to a guarantee from the business. So this means that you're still personally backing the debt if you were to borrow money. Common misconception, I will say, is that individual or borrowers that operate as a corporation, they borrow money under the business. If that corporation were to dissolve, well, in small business lending, that debt doesn't just dissolve with it. You're still actually personally liable for that as well. That's why, financial planning and making sure you're structured properly is highly recommended depending on your situation. So where a corporation, where operating as a corporation would really add value is on the tax planning side, and in terms of long-term growth. So, for example, corporate tax rates are generally lower than personal tax rates, and you have the flexibility on how you pay yourself. You can pay yourself through salary or dividends or both, which can create tax efficiencies depending on your situation, right? So it's also offers tax deferral opportunities. Um, so because of this, many business owners choose to incorporate as their business grows, especially as revenues increase and tax planning becomes more important. So I will say there's no set rule because everybody's situations are different, but it's okay to start off immediately as a corporation. It's okay to start off immediately as a sole proprietor. There's no real wrong answer, but there are pros and cons to each. With that being said, I always encourage clients to, talk to your accountant, talk to a lawyer and your banker. Between the three, you're covered on all fronts. So, yeah, let's go next slide, please. So, business bank essentials. So as you start your business, it's important to stay organized from day one. And that starts with setting up the right banking structure, including a business bank account and a business credit card. So a business bank account is essential because it separates your business and personal finances. This makes bookkeeping much easier, reduces confusion, and helps ensure your financial records are clean and accurate, especially when it comes to tax preparation. From a lending perspective, a business bank account is also very important because it provides a clear record of your business activity. For businesses that may not yet have a full year of accountant prepared financial statements, lenders can rely on the interim financials along with the business bank account activity to get a sense of how the business is performing in real time. So traditionally, a banker or a creditor will want to see at least 1 to 2 years accountant prepared income statement balance sheet. If you have interims, assuming your books are all up to date and you have good business account activity, we'll still be able to help you out as a small business lender. We can see that activity, and that will help us both, uh, for sure. So another thing is consistent deposits, stable cash flow, and well-managed transactions all help demonstrate that the business is operating effectively. So that's what we're looking for as a small business lender. Um, so even early on, having that separation and building a history of business activity will strengthen your position when it comes to applying for financing. So I will say that. So separating the account activity, building up the business side, transactions, credit wise, and you're already off to a good start. So managing expenses and building credit. Using a business credit card for day-to-day expenses is a simple way to stay organized and track your spending. It also helps build your business credit profile over time, which becomes important as you look to access larger financing in the future. So I'll often have clients where I meet them in year one. They have a $5,000 limit Visa card. 3 years down the line, they're saying, "Hey, Sean, I'm looking to buy the building I'm currently renting." And that in between, they have 3 years of track record and history of, good repayment. Definitely helps when we're making that larger uh, financing uh, uh, event. So we'll say one of the biggest benefits is how much easier it also makes your bookkeeping. So that's a huge one. So when all of your business expenses are going through one dedicated Visa card, it creates a clean, organized record of your spending. At the end of the year, you can simply just pull your statements, provide them to your bookkeeper or accountant, which makes the process much more timely and efficient. Your bookkeeper will love you as well. Um, on the other hand, if you're using a personal credit card for both the business and personal, it becomes difficult to reconcile that, right? Because you're going to start looking into, oh, was that dinner shareholders meeting, or was it, you know, your own Saturday night out with friends? So you or your accountant will have to go through each transaction, try to determine, what's business related. Takes a lot of time, it's costly, but most importantly, it does, it leaves margin for error, and you don't want to miss any eligible deductions because, all eligible deductions is reducing your taxable income ultimately, and that's the goal, one of the goals as a business owner. So, it also helps from a compliance standpoint. Having clearly separated documented business expenses makes it easier to support your records if ever required. If you're ever involved in an audit, for example, you can at least say, hey, these accounts, I know every transaction going in and out of it with confidence, and it keeps you protected that way. Um, so in addition to organization, responsible use of a business credit card helps build credit. So many of our credit cards offer cashback rewards or travel rewards, which adds value. As long as you're paying off the balance in full each month and not carrying interest, you're essentially benefiting from those rewards without any additional costs. So you'd only be benefiting by spending on your credit card, provided, and I always recommend it, only spend on your card what you can pay back immediately or in that within a 30-day period. The interest rate is quite high on credit cards. So, all right. So other financing solutions. So let's zoom up to this point. You got your plan, you've got your bank account, you've got your credit card. Um, so another product we do offer is a business line of credit. It's one of the most valuable tools for managing cash flow. It typically has a lower interest rate than credit cards, and it's designed more for short-term operating needs. So, for example, like if you have payroll due on Friday, but customer payments aren't coming until next week, a line of credit ensures you can meet that obligation on time. So, another example would be a retail or e-commerce business purchasing inventory up front and then repay the line as the sales start coming in. A line of credit is also especially useful for service-based startups. If you're running a marketing agency or a consulting business, you may need to hire staff or contractors before you actually receive payment from clients, right? So a line of credit helps bridge that timing gap without locking you into long-term debt. This is where it differs from a traditional term loan. So a term loan, you're actually paying interest day one, whereas a line of credit, you only pay interest when you dip into it. So it's a powerful tool that way in terms of cost savings. So a term loan is used for long-term investments like equipment or build outs with fixed payments over time. A line of credit is revolving. You can borrow, repay, and reuse it as needed. So operating capital is what keeps the business running day to day, while term debt is used for your long-term fixed costs, like your main startup costs, are going to be uh, financed via term loans. So for newer growing businesses, having access to capital, operating capital is critical, especially when your revenue is unpredictable or expenses are scaling. I have a lot of business clients who grow a lot quicker than they expect. So the top line revenue is year over year. It's, sometimes you see it even doubling year over year. And sometimes it's hard to control that your expenses to keep up with that revenue increase. So having a line of credit to buffer that is beneficial for them for sure. All right. So how do new small businesses acquire financing? Right. So now that we've covered the fundamentals of setting up and managing the business, we'll shift into the how to get ourselves financed, right? So we'll cover a few topics. So how lenders evaluate your credit worthiness, and most importantly, how can you position yourself for a successful approval? So, key factors for lending. So when it comes to lending, um, cash flow is the most important factor for sure. So banks lend based on your ability to generate income and repay the loan, not just on assets or net worth. So I will say this, I will emphasize that like cash flow is number one for sure. Honestly, you could have a net worth of, you could have a multi-million dollar net worth, but if you have a negative cash flow, you may not be approved. It's actually, you'll likely not be approved. So, um, your business plan and projections. So, help show your strategy, your path to profitability, and how the loan will realistically be repaid over time. So that's another key part. Um, a down payment is also important. So it typically ranges from 10 to 50% depending on the asset. This shows commitment and reduces risk for the lender as well as yourself as the borrower. Like we don't want the borrower to be in a position where, you're only putting 5% down. We don't want you to be over leveraged. That way, if there is a market downturn or external factors, something out of your control, your risk of default isn't as high, right? So the lenders and the borrowers do share risk to an extent.
Did you
Uh,
say 10 to 15 or
oh,
50?
50.
Okay.
So, and just to expand on that, like, so for example, the product we'll get into later is the Canadian Small Business Financing Loan. That's as low as 10%. But like, let's say if you were to buy bare land, just non-productive, just land, that would be 50%, like 50. So the amount of down payment is based on the productivity of the asset or the risk of the asset itself. So another major factor for sure for lending is credit history. So it's something that many people can start working on well before they even think about starting a business. So lenders will look at your credit report to understand your borrowing behavior and how you manage debt. So even before you have a business, your personal credit rating is a huge factor. So for example, so here's just some insights on what a lender will look at. So high utilization or high or low utilization of your existing credit. So for example, like if you're using a large percentage of your available line of credit or your available credit cards, and they're carrying balance month over month, this can be seen as higher risk. So even if you're making the payments on time, consistently being near limits, uh, it doesn't necessarily mean it'll be declined. It's something we would have to speak to for sure. So late or missed payments are important. So these are reported on your bureau, can significantly impact your credit score, especially if they happen repeatedly. So from a lender's perspective, it would definitely raise concern. So that's a huge part of credit worthiness. Another thing I will say, it's a little bit more high level, would be credit seeking behavior. So, if we as a lender, we look at your report and we see multiple inquiries of different lenders at the same time, uh, that could impact your credit score. The only concern there would be perhaps there's some sort of financial stress, and then the borrower's, trying to acquire multiple facilities at the same time. But at the same time, it's not the end of the world, because it's quite common for a borrower to be shopping around different lenders to get the best rate or terms. So that could be why there are multiple credit inquiries. So yeah, basically just even small things like, applying for multiple credit products at once can have an impact on how the application's viewed. But these are just some higher level tips on, increasing those approval odds. So another factor would be personal income and net worth, because, all small business credit facilities require a personal guarantee. Um, we do factor in the personal. So that's personal income sources, your savings and net worth, as well as your credit rating. So a few examples I've seen just, throughout my career, someone could have a strong business but be over leveraged on the personal side. So that means they have too much personal debt relative to their income, which can negatively impact the ability to get approved on the business side, right? And on the other hand, we see individuals who start a business who work full time or part time, and that employment income actually strengthens the application and the approval on the business side. It provides additional stability and supports the loan repayment in the early stages, right? So that's the thing. That's the cool thing about small business. We look at all sources, right? We look at the whole picture, when making a decision, for sure. So. Okay, so the government-backed loan program. So this is called the Canadian Small Business Financing Loan. So I'll tell you about this program. It's a game changer for startups or businesses looking to expand their operations. So um, it was basically introduced to help businesses access funding they might not have qualified for through traditional lending, throughout history. So startups are often considered high risk because they don't yet have proven cash flow or operating history, right? So to address this, the government guarantees a large portion of the loan, which reduces risk for lenders. So this allows banks to approve credit applications that may not normally or that would normally fall outside of the risk appetite. So the program is for thousands of businesses across Canada, and it's played a major role in encouraging entrepreneurship and economic growth, for sure. So why it's significant. So it allows for lower down payments, as low as 10% down on eligible uh, assets, and the ability to rely more on projected income rather than historical performance. So that's a huge one. So it's a significant advantage for Canadian small businesses with this product, which I'll go more into here. Okay, so now we kind of know what the Canadian Small Business Financing Loan is. I'll call it CSBFL for short. So we'll just look at how it's used into practice. So it can finance equipment, it can finance leasehold improvements, it can finance vehicles, work vehicles, and owner-occupied commercial real estate. So limits are up to 500,000 for equipment, leaseholds, and vehicles, or a mixture of all three up to 500,000, and up to $1 million for owner-occupied real estate, which is significant. So the loan to value can go up to 90% for non-food service business, and 60% for food service businesses. So food service businesses are inherently more risky, just statistically speaking, compared to non-food service, which is why they do require that larger down payment. Another huge thing for CSBFL is we use it for franchise financing. So preferred franchises can be financed up to 90%, same thing, non-food service up to 500,000. So this is important because you're buying into a proven model, right? So franchise businesses are actually 4 times more likely to stay in business than non-franchised businesses. Um, so I'll say because franchises come with established systems and support, lenders are more comfortable financing them at higher levels. So and TD does have a list of hundreds of proven franchise names that we help start up using this CSBFL product. So uh, I would recommend, talk to your local account manager and just see if you are interested in setting up franchise. Hey, we'll check out the list and see what's available for sure. Okay, so before we walk through the full example, I would want to highlight why these numbers are important and how you can actually use them when planning your own business startup. So once you've estimated your startup costs, things like leasehold improvements, equipment, and other fixed expenses, right? The next step would be understanding what that financing will cost you on a monthly basis. So in this example, we have a total project cost of 300,000, with the owner contributing their 10% of 30,000. The remaining amount financed through the CSBFL program. There is a registration fee on the CSBFL, to put it, to put it simply, it's just more so of like an insurance. It's just tacked on there because it's considered high leverage. Um, but in my opinion, it is a small price to pay for, you know, having the opportunity to buy or start a business with only 10% down. So in this case, the total loan amount is 275.4. The in this case, the borrower here is financing leasehold improvements. So what that means is they lease a space on a monthly basis. There's X amount for the lease cost, and then the 300,000 to build out their floor plan. So whatever that may be, you set up walls, you've got rooms. In this case, it's a yoga studio, so there's equipments involved, operating capital for instructors and things of that nature. So uh, this type of these this type of purchase or startup, with leaseholds, I should say, you can amortize up to 15 years. I used 7.45% interest just as a kind of a placeholder. And then that's kind of how we get our monthly payment. So this step is critical just because that monthly payment becomes a fixed expense in your business. It's also going to be one of the largest expenses fixed ongoing, um, in addition to a few others. So when you're building your financial projections, you need to include this alongside the other major costs like rent and wages will be another one of your largest expenses, to determine whether the business will generate enough revenue to cover everything and still remain profitable, right? So being able to estimate this early on allows you to make more informed decisions, adjust your pricing if it's needed, and avoid getting into a situation where like your costs just outweigh or exceed your cash flow. That's the last situation you'd want to be in. So
You gonna pass it over, Sean?
yeah, for sure. Yeah, and I was gonna say, with that being said, so we kind of worked through each of the steps of starting the business, right? So we business plan, clean everything up, account, visa. We talked about, short-term capital, revolving capital versus, fixed long-term. We talked about the CSBFL. And yeah, with that being said, I'll wrap it up and pass it to you, Daneeka, just to explain how all of this will affect the finances on the personal side.
Awesome. Yeah. Thanks, Sean. And so, like, I think you certainly addressed some of those key pieces on how your personal credit and your personal net worth impact the lending side on the business. And man, I had a couple of comments I wanted to drop in there, but I figured I wouldn't, bombshell into your presentation while you were going through. So I might bring that in over here and talk a little bit about it. But ultimately, being a business owner has some really great benefits. You get to be your own boss. You get to come in and make the decisions. But there is some things that are going to impact you on a personal level that you want to be absolutely aware of before you make this decision to go into that business. Or think about it as a risk mitigation perspective. How are we going to mitigate our risk to make sure that not only are you setting up your business for success, but you're also setting up yourself for success as well. And so certainly one of the biggest pieces that comes to mind is cash flow. We talked about how strong cash flow is important for the business. Well, when you're operating your household, a strong cash flow is probably important. And the reality for a business owner is that your income will likely be variable and it's going to be tied on your business performance. So if you have to make a decision between whether or not you're cutting yourself a check or you're cutting your employee a check because you didn't have the cash coming in, you're probably paying your employees so that they stay working for you and making that sacrifice yourself. So when you're making that decision to go into business, really think about, do I understand my variable expenses? Do I understand my fixed expenses? And do I have a game plan to cover those in short-term periods if my income is variable? Particularly when you're starting up your business, you're not going to have cash flow coming in right away. Or if you're growing your business, you might need to deploy that capital back into the business and take less as a business owner. So how are you going to set yourself up successfully to make sure that you're successful on both sides? We talked about that personal guarantee on the business side of things and how that impacts you need to make sure that your credit is good and that your creditworthy is appropriate so that you can get that lending, but understand that it works backwards as well. If you're looking at buying a house, for example, this is a really big one. First, you need to have 2 years of supported income to justify that your business can support that mortgage purchase. Second, if you've got a personal guarantee and that's going to show up on your credit bureau, it's going to look at your capacity to support those business expenses in addition to supporting these personal expenses that you want to have. So understand that what you do on the business side is probably going to impact what you can achieve on your personal side from a lending perspective until your cash flow has ramped up and you've got a lot of money that's flowing in. Maybe we don't need those personal guarantees anymore. Sean mentioned the tax planning. This is a pretty complex space. You can certainly decide on whether or not, if you're incorporated, whether you're going to take a salary or take a dividend. And the decision will have some pros and cons to both. When we take a salary, that means that we pay CPP and we have the choice to pay EI. So there's some benefits that you may receive by taking that. Versus taking a dividend, you don't have to pay CPP. So your cash outflow out of your business is stronger, but you don't have that guarantee of pension income in retirement because you weren't paying into it over time. And so how we do that from a cash flow perspective is important. Where we invest is really important. Do we keep our excess in our business as it grows and let that compile at those lower tax rates? Or do we flip it to our personal side and use things like RSPs and TFSAs to benefit that over time? Working with our accountants is generally what we're going to do to understand the best strategy for you and how we pull that out. I'm a financial planner, so I'm always thinking long-term around retirement planning and are we setting you up for success? And the reality is that most business owners don't have pension plans. You have to self-fund a pension plan, and so most small business owners in particular won't do that, which means that you have to do that. And most business owners rely heavily on their business valuation with the expectation that they put all of their energy into the business. And when they decide to retire down the road, they're going to sell that business for a certain price point and get that money back. But what happens if you can't sell it for the price that you thought you could, and you haven't had any stops and gaps in place on your personal side? understanding the risk model is really important for a business owner to make sure that we're protecting you. The other side is that once you choose to sell, there's going to be different strategies on how you sell that over time, and then making sure that cash flow is coming onto the personal side. So as you become a business owner and that business grows, it's really important to work with professionals to understand how it's going to grow for the business, but also how it's going to support you as you retire and move into different life stages. Protection and security. When we think protection and security, I think insurance is really important. If you're driving a business, you are the key driver on that business. And so what happens if you can't make those decisions? What happens if you're sick? What happens if you pass away? Can that business still operate without you? Is your family okay? Do we have enough cash flow to support you? And so a lot of business owners will get critical insurance or shareholder insurance, life insurance on those people to make sure that if there's a health event, that the families are protected and the business is protected as well. Not necessarily as important as you're small and you're starting to build up, but it's something that we have to incorporate. And a lot of the time we forget about it as we're growing because we're so focused on growing our business that we forget about those other components. And then as you've grown this business over time, I mean, we're here talking about small business and getting you started and growing it, but eventually we're going to need a succession plan on how are we going to transition this business over to the next generation or to key employees down the road, or are we selling that? And again, this comes down to having a strong, solid financial strategy and making sure we're making really good decisions that are going to set you and your future family up for success. So what I really hope that you take away from this slide is that when you're starting a business and as you grow your business, your personal and your business are interconnected and they are going to absolutely have an impact on each other. And so it's really important to understand cause and effect. If you make the decisions here, what happens here? And if I make decisions here, how is that going to impact me here when I'm trying to grow? Because we want to make sure that you can do both. Okay. All right. I feel like this slide was supposed to be at the previous slide on those key takeaways, Sean.
Yeah, right.
In terms of summary. But, if you can take anything away from this, I think the important part is that you really need to have a solid business plan and work with somebody to get that established. Sean talked about keeping your finances separate, making sure you're managing your credit appropriately. Look at those loans, have a conversation with a business account manager to make sure that you're leveraging the resources that are available to you. And, like I just mentioned, really understand your impact on your personal and your business and how they really play a role together. Do you want to have any final notes there, Sean, that you want to add in?
No, you know what? You recapped it very well. Appreciate that, Daneeka. That's great.
Mm-hmm.
Yeah.
Good. So then I'm going to pass it back over to Tracy because I believe there's a couple of pieces here regarding insurance. So I'm going to move that along for you.
Super. Thank you. Thank you to you both. So those of you who are still in the call, get your questions ready and start putting them in the Q&A or the chat function. I've got them both open. So I'm going to be very brief because I want us to get to the questions. So as I mentioned, we've just launched small business insurance from TD Insurance. This is all on the website. So if you need some guidance, where you need to go is umanitoba.ca/community/alumni. Then you need to scroll down to Herd Perks and Discounts, click on TD Insurance and TD Direct Investing, then again on TD Insurance, and there you will see this lovely page, which speaks to everything you need to know. And I'm not an expert on all these insurance products. There's so much information on the webpage and is beautifully organized. So you're able to get all those questions answered. And it's very, very simple. So you'll see here that the discount is up to 30% on flexible small business insurance coverage from TD Insurance. So it's very easy. If you've gone to get a quote for other insurance products, you just go through the request to quote. And you can go through that automated process through the website, or you're also able to contact someone if you feel that that would be a better approach for you. So the phone number is right there if you just want to talk with a direct broker. And so the types of insurance, small business insurance that TD is offering is commercial property insurance, which is really important, especially if you lease or own a space, and then commercial general liability insurance. And liability insurance is also very important to have if you have a small business. So again, all the questions should be answered on this web page. And if you don't feel that you want to go through the get a quote, then I really encourage you to call them and speak with a broker to answer any of the questions that you may have. But we're really thrilled that we've been partnering with TD Insurance, and hopefully this may work for you. So with that, let's get moving on to the questions. Okay, so the first question is actually about insurance. Hopefully I can answer this question. Is the U Manitoba alumni discount on business insurance only applicable if the business is run in Manitoba? No, it's anywhere in Canada it's applicable to. So great question. I'm so glad you asked that because I forgot to mention that. All of our TD insurance or products are available no matter where you live in Canada, but only in Canada, not outside of Canada. So thank you for that. So while others are thinking of questions, I wrote down a whole bunch of questions. So Sean, get ready. So again, please everybody, please ask your questions. So I'm not a small business owner, but if I were to be, I think when I hear everything, I think, oh my goodness, there's a lot that I haven't thought about. And this could be very overwhelming for someone who is, especially if you're starting a business, you have this great idea or product. Now what? So can you help with that? So what's the first thing I should be doing? What's the first step after I've listened to what you've just said? What should I go do?
Yeah, for sure. That's a good question. I will say, like on a daily and weekly basis, I have, the amount of clients I have that come into the branch and meet me too, and just say, hey, I have an idea. They might not even have a registered business name at this time. They just say, hey, I've got an idea. I'm looking to get out of what I do currently. I want
Oh,
to
Oh, I
start my
think
own
Sean
thing.
is for, oh, perfect.
we lost you for a second, Sean.
And, this is right into the accounts, right? Oh, can you hear me now?
Yes.
Oh, sorry.
Yeah,
Connection. Okay, how's that?
perfect.
Okay, sorry about that. Yeah, so if it's this early stage, it depends on where you're at. Like if you have an idea of what you're looking to do, I wouldn't rush into like a business account yet or any products at that time. I would say, hey, you know what? Take the time to just build your plan, like whether you can do it yourself or there are resources. Like TD actually has a great resource on our website. I could send you the link, or if we could blast that out, that'd be great. But it has plenty of good stuff. Like there's a starting your business checklist, there's a loan calculator, a business plan template, and a cash flow calculator. So you could actually go around, like I would suggest starting with the business plan template. And again, just kind of like I said in the, earlier, just figure out what it is you want to offer. Like what is your specialty? What do you want to provide to the world?
Mhm.
Start there and then just figure out how it could become a viable business, right? And then once that's sorted out, then you can see your business banker again. Second visit would be, then we would start talking about an account and then, getting your business registered. Um, you know, Registering a trade name is as little as, $60 in Manitoba. You could register a business name and you could be a sole proprietor tomorrow as soon as it's registered, right? And then you could start, tracking expenses, recording revenues, getting clients and that sort of thing. So, it can move fast at that point. An account and other products can come after that, but you know, everybody is on different timelines. There's no rush. But the one thing I would suggest spending the most time on would be that plan for sure. Yeah.
Awesome. Thanks, John.
So my next question was about registering
Hmm.
a small business. So tell me, so you're saying that it could be easy and it's not very expensive. So tell me, how do I go about doing that? So I
Right,
live here in Winnipeg and I want to register a business tomorrow. What do I do?
for sure. So your top contact for that would be the what's called the Manitoba Companies Office. So you can search them up online, or they're local here as well. They have an office. You can walk right in and start doing paperwork with them. But what they do is you can register either a sole proprietorship, or you can register your corporation. And I believe last time I checked, you can register a corporation for I think about $350, and you're
Mhm.
incorporated.
Yeah.
Um, so it's pretty seamless as soon as, and then once you register that name, it gets reserved. There might be a little bit of time for it to come back, but you'll get all your documents, and from that point, that's usually when the individual will then attend a bank to open up an account in that name. So
Yeah.
you register a corporation name, for example. You get your articles of incorporation, you walk into the bank, we make a business account that matches that name. So then when you're dealing with payments, um, you know, it's seamless that way. So
Yeah, a couple comments to note on there is that when you go in, I would say don't walk in. Use the online platform. It's
mhm.
extremely
Right.
user friendly. You don't need to waste a lot of time. But it's important for you to know what you want as your trade name, because the first step in it is that you have to go in and do a trade name search to see if anybody else has that name in Manitoba, and then you've got to reserve that name. So you reserve the name. They do a report and say whether or not they're going to approve you on that name, because they might say, oh, it's too close to this person. Or, yeah, no, that's
Mm.
good. And then once they give you that trade name reservation, then you go in and you set it up either as a corporation, or you can take that trade name and now you're a sole proprietor. It doesn't matter. You just are operating under that and you're going to take that to the bank. So it kind of depends. The other piece to note is that when we think about setting up a corporation, a lot of time we think about we need to see a lawyer to do a shareholder agreement and get everything in place. And so that's very costly if you're very young and you're just starting off. You can register and pay the $350 and you don't need to go see a lawyer. But understand that you're setting up a very basic document that's saying maybe you're 100% owner and you have 100 shares, or maybe you're a 50% owner and your sister's doing it with you. But at some point, you will absolutely need to see a lawyer to do up a shareholders agreement, or else there will be challenges in the future. And so just know that you can do this to get running because you want to get going and build that business, but there's going to be these other steps that you have to do later.
Okay.
That's right.
Thank you
Yeah.
for that. So what if is there a difference, Shauna and Daneeka, if I make widgets, if I make a something, I'm a product-based business versus service-based, like massage therapy or consulting or something of that nature. Is the process different?
Yeah, I would say like in terms of just registering, getting your accounts up, the day-to-day operations and like how you manage business, I don't think that would be significantly different. I would say in terms of like a planning perspective, for business planning, you may have different startup costs if you're making widgets, but I would say just consider that if anything. But yeah, you know what, in terms of differences,
I can
yeah.
speak to two things. So one of them is if you are a widget girl,
Mm,
you have an inventory overhead, and so generally
That's
you're
true.
going to have upfront costs that are then going to be reimbursed to you when you sell your product afterwards. So you actually need to have a larger cash reserve, or you need that operating line of credit, or you need
Right.
the loan because you're buying everything, you're making it,
yeah.
and then you're selling it. So it's harder to scale up with an inventory business without scaling up your credit, right? Because you end up getting
Good
this,
point.
I want to grow my business, but then I have to buy all this inventory in order to continue growing, and I don't have the cash in my account. So lending becomes really important. On a service industry, on a service base, So massage therapy, for example, you're going to have a leasehold improvement if you're operating out of a space, or maybe you're changing a room in your house to that space. So there's different pieces. Maybe you're going to employ somebody as your front admin. Maybe you're not. What I think of as well, because you brought up consulting, is that depending on if it's going to be a business that's just you, or it's a business that has multiple people, you could be taxed differently by the government. And so you have to just be really mindful of how's the government going to perceive you as a consultant, for example? Are they going to tax you at those higher tax rates because they actually think that you're a sole proprietor? Or are they going to allow you to use those corporate tax rates? So make
Right.
sure that you're chatting with your accountant when you're establishing your business, and be very specific on what you're doing to make sure that you've got the right structure.
Yeah, for sure. I'll add to that too. Yeah, because like I have a lot of clients who are service based. They really don't have much, like they're selling their time, right? And they don't really have like
Mhm.
a cost of goods, let's say, as opposed to say widgets. So like let's say, so there's a lot of implications with that too, right? Because like if you like let's say if I order in a cost of good is $5 and I sell it for 10, you know, when it comes tax time, like you want to record your revenue, but also deduct your cost of goods. So you're actually paying tax on the bottom line, not like your top line revenue, like you would on a service-based business. So, that's just another, I guess, implication. Not saying one's better or worse than the other, but just another thing
Yeah.
to factor in, right?
Hmm. All good points. I hadn't thought about those things. So again, a reminder to people, please ask your questions. I'm dominating the conversation here. So please do ask your questions. But I have another one. I have another question. And that is, and this is more of a probably a magic ball type of question, but is there ever, a right time or a wrong time to be starting or growing your business? Like I just think about the time we're in right now. We always see that there's cycles in the economy and whatnot, but I mean, I'm sure there's many businesses that are impacted by tariffs or threat of tariffs and things of that nature, and where you get your product from. But do you have any recommendations or thoughts on timing of all these things?
Right. Yeah, no, that's a good question. Yeah, because I will say this from my experience with the, many clients I deal with, even when we're in a downturn, like I've been with the bank for, 5 years now, and I've helped business owners through COVID. So, and I've seen businesses close and I've seen businesses start up during that same time. So, when even in a market downturn, I'll say it does present opportunity for startups as well as acquisitions. So there is that side of it. Unfortunately, there will be businesses that, have to close up shop. Just maybe they over leveraged or something happened. But I always look at it in a positive light. There's always opportunity. There's always a process to improve or a product to improve, right? That you could offer the world. So, um, and I've seen it from business owners. Like I can't say there isn't ever a bad time to start. I think the best time to start would be now, especially if you're passionate about, you know, becoming an entrepreneur. You want to change things for the better, whether it's your life or if you're something offering that you're offering the world, right? So it's yeah, I'll just say that. Yeah,
I think maybe.
I think just to finish my point too, is just like I think a lot of people hold off on starting a business just because it is quite daunting.
Mhm.
I think, and I see it all the time, right? Because there's so much involved. You're not just, setting up, for example, like you're not just building and selling your widgets. You got to do, there's so much stuff involved, with taxes, and you got to do your books, and then you got to do your marketing. You got to be on social media, and people, they get overwhelmed. Like it's not easy, especially being a sole proprietor. But, from my experience, I'll say the business owners I deal with, they tend to say that their best decision they made was starting, and they were never like say 100% comfortable when they did it. So I know that's more anecdotal, but it's definitely the general consensus for sure. Yeah.
Yeah, I think to add to that point too is that like I agree with you. The best time for you to start is now, but before you start, know your business inside and out. Like
Yeah.
know why somebody is going to come to you and spend their money, and be able to share that story appropriately, because there's success regardless of the business cycle. So how well you share your story and how well you're able to market yourself is going to determine whether or not that business is going to be successful, and of course the product that you're selling. And then, to couple that with is that risk mitigate, like make sure that you've done your business plan, make sure you understand in a slow market how long is it going to take you to build up your business, do you have enough cash reserves to offset that, because the challenge is that a business generally takes 5 years to turn a profit. Like if you've made it to year 5, you're probably going to continue going, but most fail in those first couple of years because they haven't projected out or understood really how much it was going to take emotionally, financially, like effort wise. And so the more you can prepare yourself for that, then the better you're going to be able to set yourself up for those downturns, right?
That's right. And you can always get started with your business on like part-time, right? Like a lot of
Right.
people I deal with, a lot of them actually, they have full-time employment already and they say, "Hey, I'm looking at kind of, dip my toes in the water with this type of business." Like, they want to do screen printing or they're doing 3D printing or they're building websites or any service they're doing, and they can do that on the side. So, and you can do it slowly but surely. But it's a lot better than just say, "Hey, I'm quitting my job tomorrow and I'm going to jump full time into this." Like you said, Daneeka, like you want to have a plan. You can get a lot of it done just on the side. You can register your name, you can set up the account, you can do actually a lot. And then, you can slowly ease into it. And then what I usually recommend is like, once that starts growing and growing and growing, then you kind of lower your regular job hours and you can play it pretty safe. Like you don't have to take a massive risk to start a small business. You really don't. So
Very good advice. So start a side hustle, and then when it becomes unsustainable, whether you're finding that you're seeing some success and it's impacting your ability to do other things, then you can sort of make a decision whether you go full bore or not. So great. Okay. So again, we don't have any more questions, but if I could ask before we conclude, if there's one key takeaway that we should be thinking of that you'd like to leave us with, what would that be?
yeah, I think I've probably said this word a million times there in this call, but I would say the biggest thing is if you're really passionate about starting a business or expanding your business, I would say, have a plan in place, whether that's new or existing. And I would say, you know, because there is a lot of information, I would say talk to your local account manager or message me directly. We can look at your financial position now and see where you're trying to get to. And basically what we do as business bankers is we want to get you to where you want to go. And we fit you with the right products in order to do that, right? And we explain everything. There could be multiple different options, and we just explain the pros and cons of each. But yeah, I think that'd be the biggest takeaway is have an account manager just evaluate your business and see how you can work together to reach your goals.
Great advice. Anything from you, Danica? Last
Yeah, I
thoughts?
think having a plan is really important, right? Doing those numbers, crunching those numbers is really important. And just always be assessing yourself and understanding your risk reward model and making sure you're comfortable with the direction that you're taking yourself. That's it. But have fun and just go for it, right?
That's
Super.
right.
Thank you. Well, thanks for all that great advice and information on, equipping people with making one of perhaps the largest financial decisions of their life. So thank you everybody for participating. We will be sending you a follow-up email, which is going to include a recording of this session, as well as some of the links that Sean has mentioned. And also we'll send a link to a small business provided by TD Insurance. So you have that. So it's not just a bunch of snapshots that I'm showing from the website, but you'll actually see what's there. So it will be posted to YouTube very soon, so stay tuned for that. But as I said, we will be sending you an email with all of that information. So thanks again, Daneeka and Sean. Thank you to TD Insurance, your UM Affinity partner, for the generous sponsorship of the webinar. And if we could just bring the slide deck back up on the screen, Daneeka or Mike. Just one last thing I wanted to mention is today is the last Tuesdays with TD session as part of the 2025-2026 series. But don't worry, we will be back in October with other topics and whatnot. But TD often does a number of what they call super sessions, where they invite alumni from all universities across Canada, not just the University of Manitoba. This one is special for us. But they're doing one on Travel Insurance 101, especially as people get ready to travel this summer. So everything that you may want to know, and maybe some information if you're wanting to look in travel insurance from TD. So again, that will be on our website, and we'll send that information to you through the follow-up email and in our April Have You Heard Alumni e-news. So stay tuned for that. So again, check on our website. We always have updates on our Heard perks and discounts, especially with the change in season, with different sports and whatnot that is happening. But thank you for participating. Thanks for coming to other Tuesdays with TD sessions with us, and have a wonderful evening. Thanks very much.